Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Thursday, May 25th, 2023. And welcome back to the Crypto Overnighter, where we have no sponsors, we have no agenda, and we have no BS. And I just want to take a couple of minutes to cover something before we get started. With all the nonsense in the news lately about hardware wallets having issues, if you're a Ledger or a Trezor owner, keep one thing. First, don't panic. And second, the scammers are out there, right? They're pretending to work for the company, and they're going to try to con people out of their seed phrases. So remember, don't give your seed phrase to a Ledger or Trezor employee. They will never ask you for your seed phrase. A legitimate employee won't. Why would they? They can just take it from your wallet themselves. Kidding? Please don't sue me. Now on to the news. Ron DeSantis is a leading contender for the leadership of the Republican Party and the current governor of Florida. In the past, he's expressed support for cryptocurrencies. During a Twitter Space event with Elon Musk and venture capitalist David Sacks, he officially launched his bid for the US presidency. Now, it was kind of glitchy, no criticism, it's the first time somebody's done something like this, but just an observation. So DeSantis said that he advocates for crypto. He criticized the current regime's stance on Bitcoin. He suggests that if it continues for another 4 years, it could potentially lead to the end of crypto, which would make some particularly foolish people quite happy. Now, DeSantis views crypto as a matter of civil liberties. He said that he believes that the government should not have excessive control over people's activities in the space. He kind of reminds me of RFK Jr. in that regard, on the Democrat side. Anyway, as the governor of Florida, he signed a law that prohibits the use of central bank digital currencies within the state. Honestly, I don't think this is going to hold up legally. We'll see. In the interview, DeSantis emphasized the importance of congressional authorization for CBDCs. He expressed concerns about the potential misuse of CBDCs to influence politically unfavorable transactions. He vowed to avoid implementing a CBDC during his potential presidency. However, some have argued that CBDCs provide constitutional protections for commerce, offering defense to individuals engaging in unfavorable purchases or transactions that may not be available when dealing with private companies. Sadly, CBDCs have emerged as a divisive issue in U.S. politics. Samuel Arms is the president of the Florida Blockchain Business Association. Now, that organization did contribute to drafting DeSantis' anti-CBDC bill. He revealed that DeSantis' office has received more phone calls about CBDCs than any of the other usual issues. A recent poll conducted by Quinnipiac University showed that DeSantis still trails behind former President Donald Trump among Republican and Republican-leaning voters. They show 56% supporting Trump, 25% supporting DeSantis. Now, DeSantis is not the only Republican candidate to mention Bitcoin. Vivek Ramaswamy is a former pharmaceutical entrepreneur and a long-shot contender. He's also expressed his opposition to CBDCs. He referred to this next election as a referendum on fiat currency. During the Twitter Spaces event, DeSantis reiterated his support for Bitcoin. He vowed to protect the ability for people to use cryptocurrencies if he is elected president. He believes that individuals should have the freedom to make their own decisions regarding Bitcoin and other decentralized cryptocurrencies. DeSantis said he does not have the inclination to exert control over people's activities in the crypto space. This would be a nice change from a government seemingly determined to regulate Bitcoin out of existence. DeSantis' comments come at a time when crypto exchanges like Coinbase are facing regulatory challenges in the United States. Some industry experts warn that regulatory uncertainty could prompt crypto businesses to move offshore, potentially causing the U.S. to lose its leading position in the global crypto ecosystem to countries like the UAE, South Korea, Australia, and Switzerland. While DeSantis is advocating for cryptocurrencies in the U.S., let's turn our attention to Europe, where the regulatory landscape is also evolving. The European Union's financial stability watchdog is the European Systemic Risk Board, or ESRB, and the board has expressed concerns about the potential systemic risk posed by the growing digital asset and DeFi sectors. The ESRB is chaired by the EU Central Bank Chief Christine Lagarde, and they said that new regulations may be necessary to cover large crypto conglomerates and smart contracts. The report highlighted the risks associated with crypto lending, staking, and high leverage in digital asset markets. One policy option mentioned in the report suggested that DeFi developers could be required to comply with specific regulations when designing and creating smart contracts. This could include mandatory code audits, intellectual property restrictions similar to pharmaceutical regulations, and rules for the oracles. In this case, they're talking about the software that transmits real-world data to automated software. Set to be implemented in 2024, the Markets in Crypto Assets Regulation establishes governance, licensure, and reserve requirements for wallet providers and stablecoin issuers. It does not cover crypto lending and staking areas. However, the report emphasized that these areas can pose significant risks to consumers. Under MiCA, companies will need to manage conflicts of interest between their business lines. However, the ESRB noted that there is no overarching requirement to identify and mitigate operational or reputational risks that may arise from offering services like trading and custody. The report also called for the study of crypto asset conglomerates' activities in the EU, with specific attention to any market developments and experience gained from the application of MiCA. Existing payment laws could enable supervisors to compel risky services to divest to a separate subsidiary. Although the report acknowledged that systemic implications from crypto assets and DeFi have not materialized in the past year, it warned that the exponential growth dynamics of these sectors could pose a major threat, similar to the 2008 collapse of Lehman Brothers. In March, the ESRB previously proposed the implementation of bank-style lending caps for financial technology firms to prevent overheating in crypto markets, citing the increasing popularity of cryptocurrencies. As the EU grapples with the potential risks of DeFi, a group of crypto engineers and investors in the US are challenging sanctions imposed on the Tornado Cash protocol. A group of crypto engineers and investors have filed a lawsuit in the US in Austin, Texas, challenging the sanctions imposed on the Tornado Cash protocol. The plaintiffs argued that the U.S. Department of Treasury's sanctions violate the International Emergency Economic Powers Act, or IEEPA. They said that they had incorrectly identified a foreign national and property related to Tornado Cash. They also claimed that the Treasury fails to demonstrate a sanctionable interest in immutable open-source smart contracts. According to the court filing, the plaintiffs contend that the Treasury has not established the ownership of immutable smart contracts. They dispute the Treasury's designation of Tornado Cash as an unincorporated association, stating that there is no evidence to suggest that token holders have come together for the common purpose of operating, promoting, or updating the Tornado Cash privacy protocol. In addition, the defendants argue that if the Treasury's actions are authorized, it would violate the First Amendment's free speech clause. They said that those restrictions on interacting with open source code infringe on the rights of law-abiding American citizens to engage in a wide range of speech protected by the First Amendment. Now, it is true that hackers have used Tornado Cash to conceal their illicit gains. Even so, the court filing highlights that this does not make it complicit in money laundering, which only makes sense. I mean, look at how much money is laundered through the TradFi system, and I don't see anybody threatening to kick them off the playground. The plaintiffs argue that the evidence supporting Tornado Cash's involvement in money laundering is weak. They said that the Treasury only provided 3 examples of money laundering out of millions of transactions. Meanwhile, Tornado Cash developer Alexei Pertsev is standing trial on money laundering allegations in the Netherlands. Pertsev had been granted the right to cross-examine blockchain analytics company Chainalysis. The company is often relied upon for on-chain evidence in court proceedings. Now, recently, Tornado Cash's DAO was targeted in a vote fraud attack, and the attacker has started moving their proceeds through Tornado Cash, adding insult to injury. While the Tornado Cash lawsuit unfolds in the US, let's shift our focus to Montenegro, where Do Kwon faces his own legal challenges. WorldCoin is a crypto project led by OpenAI CEO Sam Altman. It's gained significant attention in China, despite WorldCoin's crypto wallet, World App, not even being available in mainland China due to those strict regulations on foreign social media apps and user data collection. This has led Chinese users to seek Know Your Customer verifications on the black market. That's going to be a problem. Weibo is China's equivalent to Twitter, and the hashtag for WorldCoin on Weibo saw a surge in searches, reaching nearly 20,000 in May. On WeChat, searches spiked by 225% on May 18th. That increased interest could be attributed to Sam Altman's testimony before US Congress on May 16th. In response to the demand, a black market has emerged on Chinese social media and e-commerce platforms. Sellers offered KYC verifications for the World app, so the World app offers both wallet and identity services. And these verifications were often sourced to countries like Cambodia and Kenya, at least as far as we know. WorldCoin has acknowledged that a few hundred instances of such activity occurred, but reassured that no sensitive data was shared. At least that they know of, right? The company said that it identified suspicious and potentially fraudulent activity where individuals were incentivized to sign up for a verified World ID. This ID was then delivered to a third party's World app instead of their own. Similar black markets for credentials exist in China's internet ecosystem for crypto exchanges and other apps. Although mainland China imposes restrictions on crypto trade, traders are resourceful in finding ways to navigate these barriers. Ironically, the emergence of the black market seems to undermine one of WorldCoin's core objectives: to create a globally adopted blockchain-based identification system utilizing iris recognition. Now currently, users are required to visit a local WorldCoin representative to have their eyeballs scanned by a futuristic metal orb, theoretically ensuring data anonymization and local storage. Now this privacy-focused, self-custodial, and decentralized ID system is envisioned to become the foundation of the internet. That's according to World App's vision. At present, it's only used for the Wallet app. Now to attract users, WorldCoin offers free tokens to those who sign up. They recently announced a partnership with decentralized email service Dmail, promising free NFTs for signees. The black market's existence was initially reported by the Chinese crypto site Blockbeats. They said fake iris scans could be obtained for as little as $20. Chinese e-commerce platform Taobao is similar to Amazon, and they have listings for WorldCoin access. Some of these listings offer various options, ranging from a simple app download to full-on KYC verifications. WorldCoin is developed by Tools for Humanity. That's a company co-founded and led by Sam Altman and Alex Blania. It comprises two main components: World ID, which is the identification method, and World App, which is the wallet. While WorldCoin navigates the black market in China, let's delve into the broader context of China's stance on cryptocurrencies. Chinese-speaking communities were abuzz after China Central Television aired a segment on cryptocurrencies featuring the Bitcoin logo. That's according to Binance CEO CZ. Zhao expressed such coverage has historically led to bull runs in the market, but cautioned that past events do not necessarily predict the future. He also cautioned that his statement should not be taken as financial advice. He shared a link to the CCTV's website. That link showcased a segment highlighting a Bitcoin ATM in Hong Kong, complete with a prominent blue logo and the option to buy Bitcoins. The segment also mentioned NFTs. Dated May 23rd, the segment focused on Hong Kong's licensing system for virtual asset trading platforms. It's worth noting that China banned the use of cryptocurrencies in 2021. The Securities and Futures Commission of Hong Kong recently released consultation conclusions regarding proposed regulatory requirements for virtual asset trading. The Commission stated that a significant majority of respondents agreed to the proposal of allowing licensed trading platform operators to cater to retail investors. To safeguard these investors, the Commission plans to implement various measures, including ensuring suitability during the onboarding process, practicing good governance, conducting thorough token due diligence, establishing admission criteria, and providing appropriate disclosures. The guidelines for virtual asset trading platform operators will come into effect on June 1st. These rules will address aspects such as the safe custody of assets, segregation of client assets, the avoidance of conflicts of interest, and cybersecurity standards and requirements expected from licensed trading platforms. SFC CEO Julia Leung emphasized that Hong Kong's comprehensive regulatory framework for virtual assets follows the principles of same business, same risks, same rules. The aim here is to provide robust investor protections and to manage key risks while supporting sustainable industry development and fostering innovation. Now, some might take this to mean that China is softening its stance on crypto. I mean, after all, Hong Kong's going to open up in June and pump all our bags, right? Wrong. That's a mainland versus Hong Kong issue. Okay, but what about those two crypto funds started by that state-owned bank a little while ago? Nope. They were started by subsidiaries based in Hong Kong, so that's not encouraging. And that's because China's position is in fact not softening. We know this because just one day after CZ's comment, CCTV removed the video from its platform. So that's what happened. The program was focusing on recent developments regarding cryptocurrency compliance, but in Hong Kong, not in mainland. And while it's true that Hong Kong announced that it would allow licensed virtual asset platforms to offer services to retail traders, and this announcement opened the doors for retail traders to legally trade cryptocurrencies in the country, the Securities and Futures Commission has not yet approved any crypto platforms to provide such services. CZ's statement about China's state-affiliated media discussing crypto being a significant event stems from the fact that China imposed a complete ban on all crypto activities in 2021. However, the positive crypto developments in Hong Kong have sparked speculation about China's stance on cryptocurrencies. These positive developments are already having an effect on the Chinese market. China's state-owned company, Greenland, is now considering applying for a virtual asset trading license in Hong Kong, which is a big change, because China has maintained a hostile position towards foreign cryptocurrencies and has instead been promoting its own central bank digital currency, the digital yuan. China was one of the first countries to start developing a CBDC, and although it has not yet been officially launched, millions of Chinese citizens actively use the digital yuan through various government programs. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.